We know there's a dire housing shortage around Australia. And it's not just for rental accommodation, but for people needing social housing and affordable housing, and also for people wanting to live in the desirable locations around Australia. And this is only going to get worse now that our borders are open to skilled migrants and to all those international students. So it was great to see that the recently delivered budget contained multiple housing initiatives, including that aspirational target of 1 million new, well-located homes over a 5-year period. Okay, it's starting from 2024. But in my mind, while our government sounds serious about housing, I don't think they're really serious enough to fix the structural problems that have locked so many Australians out of owning a home, and increasingly, even people having difficulty renting one. So that's what I'm going to discuss today with Dr. Andrew Wilson, Chief Economist of My Housing Market. You'll hear how state, territory and local governments have also agreed to expedite zoning and planning and land release, and they're delivering on this joint commitment to make land available for social and affordable housing in well-located areas. And they're looking for immediate opportunities to free up some well-located state land. But all these promises have been made before, many times, without apparent success. With cities like Melbourne and Sydney mired in NIMBY wars, not in my backyard, and notes not over there either, designed to thwart medium-density housing, and especially affordable housing in well-located areas, all this looks like something like a pipe dream. And as you can imagine, Dr. Andrew Wilson has got some pretty firm opinions about this. So welcome to today's show.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
Look anywhere in Australia and you'll see a housing market under intense pressure. Now that makes the federal government's goal of building 1 million homes over a 5-year period under its new housing accord, it makes it sound like welcome relief, doesn't it? But is it really? We know our property markets are severely undersupplied, so any initiative to increase supply are welcome. But it seems this policy hasn't really been thought through. Even the budget documents the 1 million dwellings as an aspirational target, and the federal government itself has only locked into an extra 10,000 homes, and these won't even start until 2024. So to better understand what's been promised and what's more realistic, I'm looking forward to my chat this week with Dr. Andrew Wilson, Chief Economist of My Housing Market and Australia's leading housing economist, so we can get some insights into what all this means for our property markets. Hi, Andrew.
Good day, Michael, and it's almost predictable what came out of the budget. I do think, with all due respect, that the aspirational target to build 1 million homes in that 5-year period up to the end of the decade is just paying lip service to what is a terrible problem in our country, a problem that's been evolving now for quite some time. And you do get to the critical point where really you can't do anything about it. And we are unfortunately uniquely positioned where we are basically crowding around our seashores in our 5 big capitals, a couple of smaller regional areas, but it is all about living in those big cities of Australia, and we've just run out of capacity to extend them either outwards or upwards. And it's not just the geographical constraints that are there, it's also the web of barriers that we've created to new development. We've had a culture, an anti-development culture in this country that's become pervasive. We don't have to look back too far to see those actions by banks to restrict lending to investors and developers back in 2015-16, which was cheered on, and the catalyst was APRA for that, because they were telling us that interest rates were going to go higher, so we had danger from having too much development, too many investors. Of course, they were dead wrong there, just as the RBA was dead wrong, and just as the Treasury was dead wrong about the trajectory of interest rates. But what it's done is it's just shut off the pipeline to development. Underlying trends for new capital city development are still 25% plus lower at the moment, and that's the year-on-year monthly data, are still 25% lower than the peak that was reached back in 2015-16. And the real collapse has been in higher density apartment development. We had a surge last year courtesy of Home Builder for houses. And look at trouble that's got us into, Michael. We don't have enough labour and materials to satisfy that, and that's pushing inflation through the roof. So it's just a mess at the moment. And aspirational targets aren't going to get us anywhere, let me tell you.
Well, let's see what the government initially did propose in the budget. Treasurer Jim Chalmers explained he was looking to encourage the big banks, Commonwealth Bank, ANZ, NAB and Westpac, as well as super funds to invest in social and affordable housing. Now, under the new plan, the federal government's planning to spend $350 million to deliver an additional 10,000 homes, but Andrew, over 5 years. So all in all, the government's looking to provide a total of 20,000 homes, the 10,000 affordable and the others. And they're also expecting the states and territories to chip in as well. But where are we going to get those million homes? Currently, as I see it, there's no policy detail provided, and we don't even know how this initiative will be executed. Suffice it to say, I think the government wants to play a leading role in it, Andrew.
It's just political claptrap, I believe, Michael. It's just, we know there's a problem. If you're a tenant, you know there's a problem. It's just a way of governments trying to sound like they're addressing the problem. An aspirational target, what does that mean? Well, we know what it means. It means that we're still going to be undersupplied. We're still going to be paying 50% plus of our income in rents. And there's just the development of this have and have-nots environment from those that are lucky enough to be able to own property or have a investment property, and those that don't, that are locked out of the market and can hope to put up their hands to get one of these social housing projects that are all 10,000 of them. We are millions of homes short in this country, Michael, and it is all because of the green tape and the red tape and the not in my backyard and the messing around from our banking sector, playing ducks and drakes with particular buyer groups, creating credit squeezes and creating what is now an emerging crisis in housing in this country.
Well, the government says it's looking for the private sector stakeholders, mainly superannuation funds, to build these extra homes. But I can't see how they're going to make it commercially attractive. I know that mum and dad property investors are accepting yields of 3% gross, when the superannuation funds, they're looking for much bigger yields, particularly they can get it in commercial properties or elsewhere. So if to get the big industry funds in, the government's going to have to subsidise them in some ways, probably in a way that they're not helping subsidise private investors at the moment, Andrew.
That's right, Michael. It's just public housing by another name, is it not? I mean, the way you get the private sector involved is you have to give them some sort of incentives, and those incentives will mean tax breaks, and tax breaks are just putting your hand into the public's pocket again. It's cloud cuckoo land stuff. It's ideological claptrap. We seem to have political parties that are locked in some sort of a time warp or some sort of a class society that they think Australia is, but it's not. It's an egalitarian society and an aspirational society. And gee whiz, politicians, can't you wake up to that and start to release that aspiration and that egalitarianism and Australian risk takers that are all out there in terms of small investors at the moment, but keep getting clobbered on the head either by through the financial sector, the banking sector, or being treated as persona non grata. And yet there are plenty of people out there that would give their eye teeth to get an property somewhere just to live in, not to invest in. And they're falling well short at the moment. As I said, private sector renters, their proportion of their income that they're paying in rent is pushing above 50%, particularly if we look at the averages in Sydney. That's not sustainable in an economy where we're seeing real wages falling by record levels. And of course, the rise in rents, which reflects that undersupply of property, was a significant factor in the latest inflation data. The aspirational target, and fingers crossed, let's hope it works, it won't even cover new demand coming through, Michael, and that's new demand from opening our borders to, again, surges of migration. We need them to fill jobs, that's for sure. But we've also got local household formation that we need to cover as well going forward. We're building around about 180,000 new homes a year at the moment. So we're really looking just for the same sort of numbers. And at the moment, we can't, with that 180,000 a year, it's not enough to satisfy new demand coming in. So we continue going backwards here. And I think, unfortunately, that's going to be the case for quite some time, because we are just locked out of being able to provide the level of new development that we need, because of all the bits and pieces that stop developers and investors through the process.
Well, even if we could build them, there's a massive shortage of primary trades to build the houses, as well as materials. So to build affordable houses, making them cheaper, is not going to be easy. But Andrew, do we actually want to live in cheap housing?
No, Michael, that's the point. I thought it was interesting that, and again, this is just gobbledygook coming out. Sounds great, but when you think about it and give it more than 2 minutes attention to the soundbite, it's all rubbish. The aim is to build them in the target areas of low vacancies and high rents. That's where we're going to build them all. Well, they're middle ring and inner ring suburbs, which in Sydney you can't get hold of houses in those areas for under $2 million. And yet these are the areas, of course, where there's the highest demand for rental properties and where there are the lowest vacancy rates. And yet these are the areas that are going to be targeted for 1 million homes in 4 years, 5 years. It just doesn't add up. It doesn't make sense. The actual constraints to new development in those middle ring suburbs particularly, and outer ring suburbs, are all about the local barriers to development, and that's fine. I mean, planning laws in this country are the jurisdiction of state and local governments. There's nothing that the Commonwealth can do without having a referendum and change the constitution to have a more of a whole of nation effort to fix housing under supply. So we are unfortunately a hostage to what local communities regard as being appropriate development. And that's completely understandable. People want to maintain the characteristics of their neighbourhoods. They don't want high-rise towers in middle ring and inner ring suburbs generally. And that's always going to be the barrier. And we're not alone here, Michael. These exact same scenarios are playing out in the United States, where it is about local political barriers to development, which are causing similar acute shortages of accommodation because of underbuilding. The solution is problematic. I don't have a solution to this, but certainly there has to be some energy from governments to push aside the sound bites and come up with something concrete. It's fine for a Labor government, of course, to be pushing towards improved public housing, but public housing is just the tip of the iceberg here. We're looking at housing millions and millions of Australians who are going to be marginalised out of the private housing market because the system's just against them now.
Well, if you think about it, with our population aiming to be 29 million by 2030, it's around 26 million now. There's going to be 3 million more Australians before the end of this decade. But the government's saying, hey, let's wait till 2024. Every year that we don't build enough houses, Andrew, there's a negative impact with more housing affordability issues and bigger shortfalls.
That's right. And of course, we do know the housing market is in an adjustment process. Booming house prices last year, extraordinary booming house prices last year, particularly in Sydney, eventually, of course, led to affordability barriers, and we saw markets easing as they do earlier this year. But of course, along came the sledgehammer of interest rate increases, which has exacerbated that downturn. And the fuel to all that has been the hysterical headlines predicting just once again, almost laughably, 20, 30, 40% falls in house prices. And that's meant that buyers and sellers have been sitting on their hands. But the interesting point is they haven't been sitting on their hands for as long as perhaps many of these doomsayers anticipated, because housing markets are certainly, particularly the Sydney market, is showing clear signs of life through spring now. And I think a lot of that is because, well, they're ignoring the nonsense that's coming out regarding doom and gloom from the usual suspects, but also they want to make sure that they can secure their property assets in a period where prices are actually lower and our economy is booming. And I thought that the latest ABS data for home loans was very interesting, because even though predictably home loan activity fell again overall in August, and we should expect that, affordability issues, higher interest rates and confidence, but we did see first home buyers back in the market, Michael. And I think that was very instructive as to the mindset of that particular group of housing aspirationals. But despite higher interest rates and all the negative claptrap that's going around, first home buyers were back in the market again in numbers, in higher numbers over August compared to July. And these are seasonally adjusted numbers, which I think reflects the fact that they want to get into the housing market ASAP, which of course is what Australians have been thinking for generations. But Also, they want to avoid that rental market, Michael, which is with rents going through the roof, and also restricting their capacity to save. And in a booming economy, get on with life. Let's do what we know in our bones is the right thing to do, and that's to secure property while we can.
Well, apart from the Housing Accord and the federal budget, there were a raft of existing policies to help first homeowners that the government said they're going to continue on. The Help to Buy scheme, the regional first home buyer guarantee, the Future Fund, the Defence Home Ownership scheme. But Andrew, all these are going to increase demand, but it gets back to the problem, where are we going to get the supply?
That's right, Michael. This is what I said. The aspirational target for those million homes, it won't cover new demand coming through. And of course, that's not just migration, which has really ramped up quite quickly given from the end of lockdowns. It's not just catering for high levels of migration. It's also local household formation, which of course is about first home buyers. And we're seeing signs of those first home buyers in a market that's certainly wary, coming back in sooner rather than many expected. As I said, albeit with lower numbers, but certainly an increase on previous months. We just don't have enough houses, Michael. And I think it was interesting that you mentioned this new barrier, which I don't think is being paid as enough attention to as it should be, and that's the high cost of actual housing. I mean, builders can't build if they can't make a profit, Michael, and that's more about the standalone houses, detached dwellings, because they offer a fixed price contract, whereas, those that are developing high-rise sell off the plan, and there is some flexibility in terms of the price outcomes, but still, these are dangerous periods for builders because they don't know how building costs will continue to rise, whether they will at these extraordinary levels at the moment, and for how long. So I think that will there be a tapering off? We looked like we were going to get a tapering off in building costs over July and June. However, over August, the My Housing Market Building Cost Index increased again over that month. So it was only a short-term pause in the increase in house building costs. And of course, again, we've seen the impact of that on the inflation data that came out recently for the September quarter.
So following on from that, most of the new developments already on the drawing board having building approvals are not currently financially viable because end values don't stack up with the extra cost of building. So again, it questions how are we going to build these affordable properties? Now, it sounds like we're being very negative. We don't have a solution. The clever government doesn't have a solution. Having said that, what it shows to me is this is going to underpin the value of established properties in Australia because all new properties are going to cost a lot more, which means that it's going to drag up the value and it's going to underpin our markets, which are in due course going to turn around again just because of supply and demand.
Exactly, Michael. And the fundamental law of economics tells us that. And that's the one law that seems to still be bulletproof, given how so many mainstream and policy economists have got it so dead wrong for a number of years now in regard to what their theories are and what the actual outcomes are. We've just got to hope that interest rate policy dampens the economy to the point where we do get a lower inflation without throwing the baby out with the bathwater and creating a recession. But, that's all ahead of us now. But I think that the big focus for many Australians will be maintaining their position in this, what is still a lucky country in terms of its housing market. As I said, it seems to be our political class is completely detached from the reality of the environment. Maybe they listen to all those loudest noises that scream about housing not being affordable and ignore the fact that Australians, the vast majority of Australians, whether investors or owner-occupiers, manage their mortgage positions quite strongly. And, we still maintain very low levels of mortgage arrears and defaults. And that's because, we are a prudent country going forward and we have a robust and resilient banking sector, all four of them.
And it's also part of our DNA because maybe we should finish off by reminding people that there was 1 million new first home buyers coming into the market in the last decade, just over 1 million. Yeah. So we do want to own our own homes, don't we?
Well, we do. And unfortunately, as I said, we get perhaps government gets sucked into the property haters out there. And there are many property haters out there that have loud voices. And they're a little quieter now because they realise that the problem that's been created by all these roadblocks over the journey is, unfortunately, certainly in the shorter to medium term, I believe, insoluble.
Well, it'll be interesting to see how this policy plays out. Look forward to catching up with you in a Property Insiders chat next week, Andrew.
Yes, thanks, Mike.
Well, you heard from Andrew Wilson, and in fact from both of us, that we don't think that even 1 million new homes is going to be enough to cope with the underlying shortage of properties we currently have. And that's one of the reasons we both believe that our property markets are underpinned just by the supply and demand equation, that we just don't have enough supply for the demand that's currently there and is going to happen. And so in due course, the property market will turn. At the moment, there's the cloud of unconfidence, lack of confidence with rising interest rates, rising inflation and all the negative media. But one of the reasons property values aren't going to plummet to the degree that so many of the property pessimists have been predicting is just because of the supply and demand equation. And in due course, the circumstances will change when interest rates reach their peak and when inflation peaks, and the markets will turn. In fact, there are already some signs that they're looking for a bottom. So if you're interested in buying a new home or an investment property, this is really the time to get things in order, to get your ducks in a row, to do everything possible to give you the best chance of getting the right property. If it's a home, there are a lot of emotional discussions to have, and Metropole love helping home buyers in Melbourne, Sydney, Brisbane, where our buyers agents know that area backwards. And if you're an investor, we don't mind where you are around Australia. We'd love to help put together a plan to help you plan to become the person you plan to become and give you an unfair advantage, because the property you're eventually going to buy is going to be the physical manifestation of a whole lot of decisions you've got to make in the right order. Buying a property is not a strategic plan. Our strategic plans are very detailed, taking into account cash flow and finance and property and tax and asset protection and having a growth plan, a finance plan, a development plan for some people, because a lot of clients are looking to manufacture capital growth through renovations or development when the market's going to be a bit flatter at the moment, a property management plan. Anyway, if you'd like to understand more about what a strategic plan involves, go to metropole.com.au and, as I said, get the unfair advantage of having my team help you grow your wealth, develop your wealth safely so that you can pass it on to future generations. metropole.com.au.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In my mindset message today, I'd like to show you some happiness hacks. Look, if you've been following my blogs, especially the Rich Habits, Poor Habits ones, watched my videos with Tom Corley, or been listening to these podcasts, you know that your brain is like a computer operating system. It means that you can program it to choose what you're wanting to choose, to look for what you're looking for. The reticular activating system in your brain will search out for things, including happiness. But unfortunately, a lot of people are worriers and they're not as happy as they deserve to be. So I'd like to just share with you a couple of happiness hacks. Now, worrying about money, interestingly, is one of the biggest causes of unhappiness. But once you realize that no amount of money is going to make you happy, unless you suddenly shift your mindset into gratitude and abundance mode, you'll never be happy. We've heard those stories about those very rich people who are still miserable, haven't we? So my suggestion to you is to turn on that part of your brain that is going to be appreciative and grateful. So every morning, think of something that you're grateful for. At the end of each night before you go to sleep, think of the good things that have happened to you during the day, and your mind will be tuned and looking for more happiness. Another mindset hack is worrying is really a waste. It's a misuse of your imagination, because you're really just imagining it, aren't you? You're worrying about what could happen in the future. You're better off using your energy doing something you can control and accept what's going to happen rather than worrying about things, because your expectations determine your experiences. Expect the best out of your day and you're going to usually get it. And interestingly, most of the things you worry about are not going to occur or won't be as bad as you expect them. In fact, most things that go wrong won't last. Ask yourself, if whatever you're worrying about now, whatever went wrong, is still going to matter in a year's time. If the answer's no, then maybe it doesn't matter, or it doesn't matter that much today. Another mindset hack is being optimistic. You should be optimistic. You've heard me say before that optimists do much, much better than pessimists in this world. Now, being optimistic isn't actually being naive. It's not saying, no, nothing can go wrong. It's understanding that things can go wrong. But if you expect them to go right, you're going to find all the things that can go right, and you're going to be heading in the right direction. I think it's also important to understand that no matter how bad things seem at that moment in time, this time will pass and your life will be good again. So if you're having some challenges at the moment, remember the wise King Solomon had inscribed on his ring, "This too shall pass." It made sure that he wasn't too pessimistic when things were bad, but also that he wasn't overly optimistic when things were good. Understand then that this will pass. I think another mindset hack to make you happier is choose your battles wisely. Unless it's really worth fighting for, walk away for it and spare your energy. How often have you been cross with somebody, your life partner, your spouse, one of your kids? And the question is, are you going to leave them? Is this enough to break the relationship? And if it isn't, then is it really worth spending so much time being angry and cross? Just move on with it. So that's one of the other mind hacks, the happiness hack, choose your battles wisely. Another one I'd like to share with you is have the courage to say no to things that you don't want to do. That's going to allow you to say yes to things that you do want to do. Putting yourself first doesn't mean that you're putting everyone else last. Do the things that are right for you without doing the wrong things by anybody else. And the last thing I'd like to suggest is that regardless of what your experiences have been in the past, it's not too late to start backing yourself. Be courageous. Be courageous in your decision making. Stand by your choices and never look back. So, in summary, your brain is a computer operating system. Well, it's like a computer operating system, and you can program it to be happy or not. The choice is yours. We're living in interesting times, aren't we? But twice a week I'll be back with the Michael Yardney podcast to help give you some clarity and direction. But if you've got some benefit from this, please help somebody else understand what's ahead. On every podcast app where you're listening to this, there's a share button. On iTunes, there's a couple of buttons down the bottom if you just press it and share it with somebody, or just tell somebody about the Michael Yardney podcast, or why not tell the world by leaving a review? I'd really, really appreciate that. Now, I'll be back again real soon, but you can catch me on social media. Just look for Michael Yardney. And why not subscribe to my YouTube channel so you can get the regular weekly Property Insider chats with Andrew Wilson. Just look for Michael Yardney on YouTube or propertyinsiders.info. You can also join my private Facebook group. There's lots of places to find me. The Facebook group is Property Update Private Facebook Group. As I said, I'll be back again real soon. In the meantime, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael, but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?